What is the historical performance of SCHD? This is what I will discuss in that video. Before I dive deeper, it is important to understand the year SCHD was created and what was going on with the economy back then. It was created after the great financial crisis had already happened and the economy was entering recovery mode. This is something you always need to pay attention to. If you compare two funds solely on performance, and one was created in 2010 and the other in 2006, then bear in mind that the other fund might have lower annual performance because it will have taken a major hit during the financial crisis. And so that means that the funds might be equally good, but the one that is from 2006 might have worse performance because it includes a major bear market in its history. It is basically like the difference between buying real estate in 2006 versus buying it in 2011. For SCHD, the current total return since inception is 291.32%. The 10-year annualized return is 11.05%, which is pretty good. Now, I assume that if you are interested in SCHD, you are mainly so for the dividend income and appreciation it provides. And in that field, SCHD really shines with 10-year dividend compounded annual growth rate of 11.11%. Of course, no one knows if that will continue, and we can see that for the past 12 months the growth rate was 5.7%, but it is a good track record. Speaking of the last 12 months, the share price performance of the fund for that time frame is currently at 4% up. Since I'm a cash flow investor, I am not that interested in the share price fluctuations, but for those of you that are, you might have seen the ETF compared to the S&P 500, which is up 15.65% the last 1 year. Now, by the time you watch this video, all these stats would have changed, so they don't matter that much. But the reason I'm showing you all this is to illustrate a point and to make you understand that comparisons like this are totally meaningless. Why? Well, because the two ETFs have different goals and methodologies. A person doesn't buy SCHD for the same reason they buy S&P 500. And for everyone who tells you that SCHD is up or down compared to the market, well, don't listen to them. Regardless of when you are watching this and what the situation is currently, this is true. S&P 500 is not the market. The index returns are driven mainly by a handful of big tech corporations that have currently seen their share prices explode, mainly because of the AI narrative. This has been true for years now and will probably be true for years ahead, regardless of whether the AI craze fades away, intensifies, or something else takes its place. So to compare SCHD to S&P 500 is like comparing apples to oranges. They are just different because they are constructed differently with different sector allocations and are used for different purposes by investors. This video is part of my extensive review I did of SCHD. To watch the full analysis, click on the link in the description or the video appearing on your screen right now.